Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. As we prepare to round out the trading week, equities remain choppy. Traders are assessing real-time headlines related to the duration of the conflict in Iran and energy supply disruptions. As of 7:50 a.m. Eastern, the price of ICE Brent crude stood at $89.35. Amid the volatility, the S&P 500 finished Thursday down 0.7% on the week. That put the large cap index just 2.5%, its record high. Let's take a look at what's on tap this hour. Two-time gold medalist figure skater Alyssa Liu recently spoke with Kristen Scholler at the rink at Rockefeller Center and even rang the NYSE bell. Today, we're bringing you the full conversation. You won't want to miss it. And news outlet Axios will drop season 2 of the Axios show later this month. Its publisher, Nicholas Johnston, will join NYSE Live to tell us more about the series. And Robinhood will ring the opening bell to celebrate the IPO of its Ventures Fund 1. It's a closed-end fund that gives investors exposure to private companies. I'll speak with Robinhood CFO Shiv Verma after the bell. And just over 30 minutes ago, the Bureau of Labor Statistics released the February jobs report, giving investors a fresh glimpse of the U.S. economy. And here's what we learned. The U.S. economy lost 92,000 jobs last month. That is below economist estimates of 50,000. Additionally, the unemployment rate rose steady to 4.4%. And here to break down that data and so much more is Ben Emmons. He is the founder and CIO of FedWatch Advisors. Ben, welcome to NYSE Live.
Good morning, Ashley. Good to see you.
So they expected to add 50,000 jobs and they lost 92. What do you make of this report?
There were a few things going on here. There was a big strike at Kaiser Permanente that was counted in that number, and then there was some seasonal effects, and the BLS always has challenged with the statistics, so they made some changes to a particular model, how they count for new business employment and business going out of business, and then account for that unemployment too. And I think all of that coming together dragged the headline number just down, but it's always a surprise. Like, I had myself forecast of 85,000 based on real-time indicators, which are all good indicators, and yet this payroll report comes out really differently. So sometimes it occurs that we have a survey period, which is the time when they collect the data, that certain specific things happen there, like in this case a strike or weather or whatsoever, and just throws off the entire calculation. So is it a bad number? It's not a good number, obviously. There's a lot of losses across the board. But I wouldn't read into this like, whoa, okay, we're going to see more negative numbers from here, because we actually still have a pretty good labor market at this moment. Given the jobless claims number, unemployment rate didn't go up too much. It's like a tenth, which is not significant. So I think it was just a headline drag here at this moment.
How does the BLS collect this data?
So they use what they call a survey, where they send out 3 times a month to a actually small sample size. I think it's like 2,000 people or businesses. You know, how many people they've hired or laid off and that sort of thing, and essentially collect from there what the payroll data would be looking like, which is a small subset actually what actually is happening, but that's the way it's done. And then you have 2 other surveys. You have the household survey and the establishment survey. One counts for 2 jobs and the other one for 1. Forgot which one. But either way, they merged those 2 together and then put that in that survey period. It's about 2 weeks, 2.5 weeks that they collect that data. And it turns out that not everybody responds to that data either, by the way. So they're getting typically about 40% of the actual respondents basically telling the BLS, yes, I hired people, I laid off people. And that's how it works.
All right, and February 2026 ADP data was released on Wednesday. It showed that U.S. private employers added 63,000 jobs. How heavily is this report weighted versus the jobs report that we received this morning from the BLS?
Well, ADP has become more important. You know, that's actually the true payroll data. It's people on the payrolls, whereas the non-farm payrolls accounts for essentially the entire labor force, if you think of it that way. So the non-farm payroll report has more fluctuation than ADP, but people have been looking at ADP saying this is a quite consistent report now because of methodology. So I think either way's strong, but this report is the bellwether. You know, whatever happens with this, whether it's strong or weak, it drives the market actually. And we can tell that the markets are reacting negatively to this report.
And do either of these reports have a strong bearing on the Fed's interest rate decisions? Like, how heavily do they factor them in? Do they look at private jobs data?
They do. I think they've gotten far more sophisticated over the years to look at other alternative data as well to gauge what the payroll data really are, what the labor market really is doing. The Chicago Fed has now a real-time dashboard of the unemployment rate and hiring and layoff data, which they track across all kinds of industries and doing their own surveys. And it just showed that it's been quite steady labor market. So this is an outlier report in this way. But in the end of the day, the unemployment rate in particular, how it's calculated by the BLS, that's the official statistic that the Fed does follow. I mean, there's not an alternative unemployment rate that they would accept as an input to monetary policy.
And let's shift to oil prices in the Middle East. We've seen oil prices surge since the conflict broke out. How much can oil prices spike if the Strait of Hormuz blockade continues?
I think a lot. It already are up like almost $20 now from Sunday's level when we finished something like $67 on Brent, and we're at 89 now. That's $22. So it's a huge move. And it's in line with previous sort of oil price spikes that we've had in the past, whether it was in the 70s or 80s or 90s. You know, that can have a big impact on our economy at some point. The gas prices is already coming through pretty quick because Brent is the contract for our gas prices. And then interest rates have reacted to this movement in oil prices going higher. So the mortgage rates will be resetting higher really quickly now too. So that both of that puts pressure on the economy quite quickly. We transmit that really fast.
And could the war have an impact on Fed rate decisions moving forward?
Initially, they may look at this a little bit through it, saying like, you know, again, you're getting a shock. Let's see how it plays out, sort of language. But then the history, though, has shown that the Fed tends to look at what's the ultimate impact on employment. And the history of it is not good because whenever oil prices go up 20, 30, 40%, the unemployment rate goes up too. And that's what they will react to. There's some extreme studies on this, but I saw this morning, like, if the oil price goes up, say, by 100%, the unemployment rate could go up by 1.5%. That would be really significant change from the current situation. I do think the Fed will react to that quite aggressively.
And Ben, there's so many different storylines. We have the conflict in Iran, we have the jobs report, inflation, the Fed. How are all of these things connected?
They are very interconnected because, you know, as you sort of outlined, like we had this AI story, we had the economy doing well, we got the big beautiful bill, we got now this war coming in. So this is sort of like giving us a mix of an economy it could get hit by this conflict, by the way, more significantly, I think. It's definitely maybe coming through the next number of weeks. Against the backdrop of having all the stimulus coming in too. We have investments coming in, we got spending, and then the uncertainty about how AI exactly affects the economy through higher productivity and perhaps maybe more unemployment, yes or no. And then the tariffs are on top of this too, right? We have the new tariffs now potentially put in place as of next week, a 15% global tariff. So I think you're getting a very uncertain situation. The business uncertainty will rise again. Consumer sentiment will get worse. And it will not only be politically an issue, but it will be economically an issue. So I think the next few weeks, our data will change a lot.
And in our last minute together, we've seen Treasury yields go up. And I understand you say it's not only inflation, but perhaps strong data that's causing the bump?
Yeah, that was interesting this week that the ISM data that came out on Monday and Wednesday were more stronger than expected. And on both occasions, the 10-year yield went up with something like 3, 4, 5 basis points, something in that range. So I calculated from the weekly change of the 10-year yield, more than half of it can be explained by that strong data, which does still say that if the economy holds up through all of this, rates should go a little bit higher. It makes sense. If inflation becomes an issue, which it could be, and I think this is what yields are responding to as well, the Fed cannot cut rates. In fact, all the rate cut expectations will be rolled back, and the Fed will become more, what we say, hawkish in its language to make sure that the expectations don't get out of control, because they will react to what happens with gas prices in particular. And I think this is a worry in the Fed. the more gas prices go up, the more consumers expect future inflation to go higher as well, and that's troublesome.
All right, Ben Emmond, founder and CIO at FedWatch Advisors. Thank you so much for joining us on NYSE Live.
You're welcome, Ashley. Thank you for having me.
Thank you for being here. Fresh off the Olympic Games, the NYSE brought the gold to Olympian Alyssa Liu, our NYSE gold belle, that is. You won't want to miss our interview with her up next.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. Two-time Olympic gold medalist figure skater Alyssa Liu was in her element on Tuesday, joining Kristen Scholler from the rink at Rockefeller Center in Midtown Manhattan. Here's what Liu had to say about International Women's Day and stepping out of retirement and skating her way to Olympic glory.
We're here at the rink at Rockefeller Center, and I'm joined by two-time Olympic gold medalist Alyssa Liu. Alyssa, welcome home and congratulations.
Thank you so much.
It's great to see you here in New York. Are you still riding that high from your wins in Milan?
Not really.
Why not?
I got to celebrate like there on the ice with my teammates, and now I'm just home. I can relax and be chill.
Yeah. Good. Well, it was absolutely stunning to see you compete, and I love your story because you retired a few years ago, but then you decided to come back to figure skating, this time on your terms. How so?
Well, I wasn't able to pick my own music before, pick what dresses I wore, pick the programs I had, and this time I get to because I have my own, I have my own ideas and my own opinions about all that stuff, and it's really my art, and I am just here to express it.
Yeah. And we see that, just how at ease you are on the rink. What is that creative process like for you?
It's a lot of listening to music. It's a lot of dancing on and off the ice. And honestly, I get a lot of inspiration from my siblings and my friends, so I prioritize being with them.
What about taking the business of your art into your own hands is going to carry you forward?
I mean, I feel like things are better when, because I'm technically the artist, the skater, the athlete. When I have more control over everything, it just runs a little smoother. I know myself really well, so that helps.
Yeah. Are you taking a break? Kind of just in terms of, refueling after such intense competition in Milan?
Yeah, I mean, right after, I didn't sleep for 3 days after the competition, but then when I got home, I said I wouldn't do any media and all that stuff, and so I got 5 days at home of nothing. I just got to relax. So, It was nice.
Yeah, well, we so appreciate you taking the time to talk to us. You know, there's so many amazing moments. Of course, your performances on the ice were incredible. And just your camaraderie with your peers and your competitors in Milan was beautiful to watch as well, since it's Women's History Month now in March of 2026. Why is that important to you, supporting other women, including your competitors?
Yeah, I mean, it's really important because we all are just our own individual athletes, and we all just share the ice together. And we're all good in our own ways. And I really do think the more we uplift each other, the better we all get.
How heavy are these gold medals? I hope we can zoom in. They look beautiful, Alyssa.
Do you want to feel?
Sure, let me take a feel here.
Yeah.
Okay, where are you going to put these when you take them home?
I mean, I just put them back in their little box, and then I just store them away.
What's next?
I have maybe World Championships coming up. I have yet to fully decide if I'm going to do it, but I really want to. That's end of March. And then we have Stars on Ice tours, where me and the other Olympic skaters, we go and do programs all around the U.S. And that's coming up in April.
Do you have your music and costume picked out?
Yes, I do.
We'll be watching closely. Alyssa, you've brought the gold to us. So we brought the gold to you. This is the New York Stock Exchange bell. Yes, and we invite winners at the NYSE to ring the bell to mark the open and close of markets each day. We've got a gavel right there. Will you do the honors for us and give it a ring?
And I just hit anywhere here, right? Like anywhere?
Yep, anywhere that feels right.
Okay.
You can do it more if you want.
I can do more?
Yeah, do it. Keep going.
Going out with a bang, Alyssa.
Thank you. This is fun to hold.
Yeah. It is a lot of fun. Our head of media has a gift for you as well.
On behalf of the New York Stock Exchange, we wanted to give you a challenge coin. And listen, you're more than up for the challenge. You brought gold home to us. We brought the bell to you, but congratulations from all of us.
Thank you. Thank you.
We really appreciate it.
Cool.
We'll be watching you, Alyssa. Congratulations again.
Thank you so much.
Thanks, Alyssa Liu and Kristen Scholler, for that interview. And coming up next, Robinhood executives will ring the opening bell to celebrate the listing of its new venture fund 1.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. Season 1 of the Axios show delivered sit-down interviews with Vladimir Zelensky, Bernie Sanders, and Mel Robbins, among others. Season 2 premieres this month, presented in partnership with NYSE-listed Uber, and it's going to feature 6 new episodes released through May. And joining me now to discuss more is Axios publisher Nicholas Johnston. Nicholas, welcome to NYSE Live.
Hello, good morning. How are you?
Great. So as I mentioned, we saw some really interesting interviews for season 1 of the Axios show. How did you come up with the idea?
We've always been interested in video. Axios got our start almost 10 years ago, primarily as text-based. You can sign up for all of our newsletters at axios.com. But there's a lot of people who consume information differently. And so we wanted to be able to find a way to reach them where they are. And so video has always been something that's been on our mind. A few years ago, we had a little bit of a run with an HBO show, Axios on HBO, which was a great success. And since that show sunsetted, we've always been looking for new ways to jump in. And so we're really excited about the partnership with Uber, which started last year, which let us reinvest in this kind of project. How do we bring our journalistic sensibility, getting you smarter, faster on the topics that matter, to an audience that consumes information by video, and then also getting some of the biggest newsmakers, like you said, having Zelensky last year in the midst of the Ukrainian war was a really great interview. And so trying to get those kinds of folks on for our style of interviewing, very fast, very sharp, information dense is a phrase I love to use, getting a lot of information in those conversations and with really big name guests. And so we are burning up the phones right now, working to land some of the biggest names we can, hopefully for big interviews later this month.
Can you share any of those names or highlights with us for season 2?
I wish I could. As you can tell, this is a very busy moment in news. There's a lot of moving pieces, and none of these interviews are booked until we turn on the camera, as far as I'm concerned, because there's so many moving pieces. But we got some big names, and as soon as we can nail those down, I'm definitely will be crowing about them online.
I totally get it. And season 1 pulled in over 100 million views across its content, and it sparked headlines across major outlets. What did you learn from that first run that you're carrying into season 2?
Definitely there's an appetite for this. If you can get really big newsmakers, you can get them to tell us things that we didn't know already, you can definitely make an impact. And then we've learned a lot about how to structure the news, how people consume information. This has been an obsession of ours at Axios since day one, like how people consume the news. What is the window to the world? Their phone. And so we spend a lot of time thinking about not just releasing the video, the interviews totally, like the full 15, 20, 30 minutes, but identifying those unique news moments that we can deploy on the internet, deploy on YouTube, on social media platform, on LinkedIn, to make sure the right audiences are learning what we learned from those conversations in the most efficient way. And if you cut and clip and promote those correctly, that can really just boost your viewership exponentially. And so thinking about it like very deliberately, not just as the whole of the interview, but the distinct pieces of information that are released. That was a great learning experience in season 1 that we're really going to double down on season 2.
And you talked about Axios's sharp reporting. What else differentiates you from other media outlets?
I mean, I'll say that, like getting scoops. The whole formation of Axios, I was the editor-in-chief for the first 5 years, did a lot of hiring as publisher, I think constantly about new products and how to grow the business. At the heart of that is like, can we tell people things they don't know? Can we break news? Can we provide scoops? Can we get the president on the phone like we did yesterday when he told exclusively our own Barack Ravid about his next plans for the new leader of Iran? And then can we help you understand the word? Can we provide what I like to call conceptual scoops? Can we talk to newsmakers, the smartest people on earth, to help you understand the world as it's changing? The world is going crazy right now with geopolitics, with the rise of political movements, and then of course with AI. And how can Axios be your guide to understand how those things are going to change the world and help you master the century that's coming?
Yeah, and upon announcing season 2, you said new season, same mission. So whether it's in format, guest, or editorial approach, what do you think is going to be fresh this time around?
I think just getting bigger and bigger names, like being able to expand our remit, not just in politics, but in business, but getting into technology, getting into state politics, keeping a focus on international relations. We are obsessed about the biggest trends that are shaping the world. That's the newsletters that we launch. Those are the beats that we craft for our reporters. And so can we find the most important people on those beats? ask them the hard-hitting questions and use those answers to explain either what's about to happen or understand how the world is shifting beneath our feet. Big focus for the coming year.
And NYSE listed Uber is back as the presenting sponsor for this season. Can you talk about that continued partnership?
Yeah, it's been so great to work with them. As publisher, my entire goal is to figure out ways that we can fund journalism. Like I'd like to joke in the newsroom that my only goal is to hire journalists, and the only way I can hire journalists is by getting people to give me money. So we're always looking for innovative partners who think like we do about the important topics of the day, about how to understand the future. And Uber was a great innovative partner in season one. Seeing what we saw about how to tell these kinds of stories, how to do this kind of journalism, and the support with them is the only thing that made it happen. And then understanding the success of that and joining us again for second two. It's been great to work with them. They support our newsletters in addition to the show. It wouldn't be happening without them, and we're very grateful for the help that they're doing so we can do another awesome season.
And when will the show premiere, and how can people check it out?
You can sign up for Axios AM at Axios.com. We'll definitely announce any guests that we book there. We hope to launch it sometime this month, but like I said, it all depends on the guests, and there's a lot of moving partners, a lot of moving pieces to get that camera in front of that big name with all that's happening in the world. And so the second one of those lands, we'll be hopping on planes, taping the interview, and then dropping it online.
All right, Axios publisher Nicholas Johnston, thank you so much for joining us on NYSE Live. It was a pleasure.
Thank you.
Coming up next, Robinhood executives will ring the opening bell to celebrate the listing of its new Venture One fund. They are down there on the floor. They have just signed the distinguished guest book. They will be making their way up to the podium to celebrate their listing today on the New York Stock Exchange.
16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto.
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream. And that's why it will be a successful company that delights the world with unbelievable products.
Welcome back to NYSE Live. In just a moment, Robinhood Ventures Fund 1 will ring the opening bell to celebrate its listing on the New York Stock Exchange. Ventures Fund 1 is a closed-end fund that gives investors exposure to private markets. It's aligning with Robinhood's broader mission of democratizing finance. This is the company's first fund under Robinhood Ventures, trading under the ticker symbol RVI. There is CEO of Robinhood Markets, Vlad Tenev. Take a listen. You just saw CEO of Robinhood Markets, Vlad Tenev, ring the opening bell to celebrate the listing of the Robinhood Ventures Fund 1. Later in the show, I will head down to the floor to speak to Robinhood's CFO, and the U.S. stock market is officially open for trade. Joining me now is David Bush. He is the co-chief investment officer at Trajan Wealth. David, welcome.
Good morning. Thank you for having me.
So beginning with rising tensions in the Middle East, how are you thinking about the potential impact on global oil markets and what it might mean for investors?
Yeah, we're seeing the impact right now with both West Texas Intermediate and Brent crude oil prices jumping. Brent crude's right around $90 a barrel, and West Texas Intermediate has jumped to close to 87 the last time I checked. And so what's happening is this is adding to the inflation concerns that have been spilling over across the globe, specifically in the U.S. markets. And really what this leads to is there really is no catalyst for the Federal Reserve to cut rates because inflation pressures are going to remain higher. And it's likely going to slow the economy a bit.
All right, and beyond oil, how do you see the Middle East situation affecting the broader global markets and sector performance here in the United States?
Yeah, I think the opportunities that we've seen are in the oil and gas producers and refiners. They're going to be a major beneficiary of this, specifically in the North American markets. But also, if we zoom out even further, defense contractors are performing well. A lot of defensive sectors, utilities, and so on are performing well. Those that are getting that are lagging are those that are more rate sensitive, and those that are where there's still concerns about the rising AI concerns.
All right, and domestically, we're seeing growth cool while inflation continues to remain stubborn. What, in your opinion, are the main drivers of these trends?
The inflation is really driven by a couple things. One is, and we saw in the numbers today, is that the U.S. consumer is still spending. Retail sales were better than expected this morning, but also we have the impact of tariffs and the impact of rising energy costs that are permeating the economy right now. So that's going to keep at least the headline inflation higher, as well as potentially core inflation.
All right, and we're still a couple of weeks away from the next Fed meeting and rate decision. How are you thinking about the central bank's approach right now?
Yeah, it's very unlikely that we will get any rate cuts, potentially even for the remainder of this year. Right now, the market is not pricing in any cuts for 2026. So what we're looking for is a hawkish tone from the Fed, meaning that they're going to say that inflation is persistent, and so as a result, rates are going to remain higher for longer.
All right, and stepping back from this month's meeting, how are you thinking about the Fed's overall path for 2026? I know you mentioned you didn't foresee any rate cuts. Why don't you think so?
Well, when the Fed looks at economic numbers, they're looking at core inflation and the unemployment rate. Well, core inflation is still higher than the 2% target, and the unemployment rate, even though it ticked up from 4.3 to 4.4, is still at historic lows. And so unless there's a major catalyst, a continued softening of the labor markets, the Fed really doesn't have a reason to cut unless there's a major event that causes the labor markets for the unemployment rate to shift higher.
All right, and what is your takeaway from today's job numbers that came out? They were expecting 50,000 jobs, and obviously we saw jobs eliminated. What is your takeaway?
Yeah, the jobs numbers have been hit or miss, and I think a lot of it has to do with the way that they survey. But having said that, we're seeing it in the news headlines that there is a softening of the labor market, and so last month's jobs report just was a surprise, and so now we're sort of getting back on trend, is what it appears to me.
All right, and with markets showing a bit more of a risk-off tone, how are you advising investors to think about positioning in today's environments?
Yeah, the way that I'm thinking about it is really in three different ways. So one is, I think that large cap tech is still the wave of the future, and so I still want to maintain some exposure there. but also we've seen that broadening of the markets, and we've seen those defensive sectors that have performed well. And so it's really balancing that tech, large cap tech versus, or coupled with large cap value, dividend payers, and even getting down in the middle markets. And then the other thing that I'm thinking about is bonds, because bonds have historically been a good volatility dampener, and yields, if they're going to remain higher for longer, there's still opportunity for investors to invest in the fixed income side of the market.
And David, any under the radar storylines in our last 30 seconds that you think we might be hearing about in the coming weeks or months?
Yeah, a couple things that I'm most concerned with is the health of the consumer. We have rising delinquencies and defaults on personal loans, credit cards, and so on. And so that's going to continue to rise. And my concern is that the consumer is going to pull back from spending. And as a result, more defensive retailers or lower cost retailers, lower cost food suppliers are going to benefit, in my mind, versus kind of the higher end retailers.
All right, David Bush, Co-Chief Investment Officer at Trajan Wealth, thank you for joining us.
Thank you so much.
Still to come, International Women's Day is this Sunday, March 8th, and this year's theme is Give to Gain. It is a message that aligns directly with the work of Georgie Dickens, CEO of Women in Leadership Global. She's going to join us to talk about the power and purpose of the day. And I caught up with Alex Faherty, CEO of the laid-back apparel brand Faherty, at the ICR Consumer Conference in Orlando in January. He shared the story behind building the brand with his identical twin brother and his take on the trends shaping the apparel industry right now. You're going to want to hear what he had to say. And later on, I'll head down to the trading floor to speak with Robinhood's CFO, Shiv Verma, to find out why Robinhood Ventures Fund 1 accelerates the company's mission of democratizing finance.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. International Women's Day is this Sunday, March 8th. And this year's theme, Give to Gain, is fitting for our next guest. Georgie Dickens is the CEO of Women in Leadership Global, and she's here with us to talk about the meaning behind the day and how this year's theme is reflected in her own work. Georgie, welcome.
Thank you for having me, Ashley.
So what is the mission of Women in Leadership Global?
Our mission is to advance the face of leadership. It's a private membership network where it is about bringing together exceptional leaders from financial services. And it is for those women who want to elevate their game. They want to increase or amplify their impact and influence in the world, but who are also seeking community. No one's an island, and it's really valuable to have that peer network to lean into for advice, for insight, for information, and to give you that honest perspective. So advancing the face of leadership was our mission, and we get to see so many great examples of women now who are owning their voice more and who are taking on those larger roles within their organizations.
How does the organization work? Do you have meetups? Is there a network somewhere? Are you connected on social media?
Yeah, we run transformational programs. So everyone who's part of the network joins a 6-month program, and we teach them mindsets, the behaviors, the skills, the tools in order that they can, as I said, elevate their game. But the programs are also, it's about bringing together, as I said, this trusted community, because all the women in the network, they've got years and years of experience and advice and lessons learned. So it's a group of people you can go to be like, I'm experiencing this within my organization. How would you deal with that? So leveraging the community is such a powerful, it's a force multiplier when you leverage it.
And this year's International Women's Day theme is Give to Gain. What does that mean to you personally, and how is that reflected in your work?
I love the theme this year, and I think the Give to Gain, it should be one that we all practice and exercise every day. And I think it's those small acts, which are also gifts. Whether it's giving someone as leaders, giving someone a piece of advice, giving feedback, giving someone a piece of a platform for visibility, you never know when those small acts, they really can make a transformational difference. So the Gift to Gain, it feels a very a powerful one that we can all, have intention around every day, and it doesn't need to be a big direct debit of time. I said it's those small acts that really can make a difference.
And we're in a period of intense global volatility, markets, geopolitics, AI disruption. How are women leaders that you're working with navigating this moment?
Yeah, I think one of the key things is being really intentional about creating time to think. There is so much noise coming at them from, well, not just female leaders, but leaders in general from every angle. And there is so much, there are huge demands on their time. So creating that time to think is critical, because that's where that ideation comes. That's where you're able to connect the dots. That's where you're able to synthesize information and really, give thought to what is the best strategy going forward. Given the fact there are so many demands on your time, being intentional and carving out that time and prioritizing and fiercely protecting it is critical. And then I think the second thing is for female leaders, and I said generally leaders, is about surrounding yourself with an awesome leadership team. You can't be an expert on every aspect of the business, as you shared, geopolitical, AI, private, public markets. There is so much that leaders are having to learn and navigate. Hence, having your team who are the experts, empowering them, trusting them, and then getting out of the way so you can do what you're uniquely positioned to do.
And when you say creating time to think, what do you mean by that? Are people so busy now that you feel like they need to actually carve out time to recharge and connect with themselves?
Connect with themselves, but also if they're thinking about business strategy, their vision, if they're thinking about their execution plan. Many leaders live in a world of back-to-back meetings, and they could be drinking out of the proverbial fire hose every day. And therefore carving out that time that's dedicated space to think about their own personal strategy. Where do I want to be 2 years, 5 years, 10 years from now? What are my fuel sources, and how am I, making sure I'm investing in those? That stuff is all so critical, and yet I don't think people typically find themselves with time. So therefore, that actively creating it is a game changer.
We have just a few moments left, but how will you be spending International Women's Day on Sunday?
I will be in Miami at the FIA Boca Conference, and I'm hosting a dinner for C-suite leaders where we will be discussing a lot of the topics that are coming up today, and in warmer climates, I might add as well over there.
Well, enjoy that. Thank you, Georgie Dickens, CEO and founder of Women in Leadership Global, for joining us at the New York Stock Exchange.
Thank you, Ashley.
So good to see you again. I recently sat down with Alex Faherty, CEO of the relaxed apparel brand Faherty, at the ICR Consumer Conference in Orlando. He opened up about building the company alongside his identical twin brother, and he shared what trends he sees shaping the industry right now. Take a listen.
So I started the brand with my identical twin brother, and since I was a little kid, he has told me what to wear basically like every day of my life. He's always loved clothes, and we grew up in this small beach town in New Jersey called Spring Lake, New Jersey, on the Jersey Shore. And so we grew up as surfers. Like we would go to surf shops and buy all of our clothes. And then when we were teenagers, we moved to New York City. And so my brother, as like the guy who loved clothing, started shopping at Bloomingdale's and Ralph Lauren. And his senior year in high school, he wrote his college essay on starting the brand, which was basically a brand that merged our two lives that we had, the life at the beach to our life in the city, to create a brand that kind of we could wear when we're in the city or when we're at the beach. And since we were 18, we said one day we're gonna have a clothing company. And so Mike went and worked, studied fashion in college, and he worked at Ralph Lauren for almost 10 years. And then I went into private equity and investment banking after college. And so 13 years ago, we decided to quit our jobs to kind of start this dream brand that we always had talked about since we were kids.
And now you have 83 stores across the country. You're opening one in France. How did it turn into such a big business?
That's a great question. I think some of it was, we had a business plan and a strategy from when we started, and that was us studying a lot of other brands and how they did it. And it was kind of piece by piece. We started as a wholesale business. So most of our business in the first few years was selling to department stores and specialty clothing stores across the country. And then we started opening up a few stores. We saw some success with the stores. Then we saw more success online. And so it's just kind of been like step by step. I think a lot of it is like trying to create a brand that can differentiate itself in a very crowded market. And for us, it's been really about like, we are casual. Like we love casual. Like that is our vibe. We grew up at the beach. But I think also being able to add some fashion elements of New York or LA into that brand, I think has been something that customers really want. Because it's like brands used to just be like, oh, surf shop or outdoor shops. And then they were like department stores. I think being able to merge the two and bringing in innovation and interesting fabrics and great feels and touch to this like more casual segment, I think has been really has been a big piece of it.
Is that how you would describe the brand aesthetic, casual with a New York vibe?
I would describe it as a brand that has this sort of like American outdoor beach sort of lifestyle kind of mixed within fashion, beautiful fabrics, great quality to kind of like bring those two together. Because a lot of brands that are fashion brands tend to be very serious and to be like more stuff you wear going out. And I think for us, it's finding that right balance of the two. And but listen, we're lucky because this brand is our last name on it. So much of it is the things that we like, and my wife's in the business, my mom's in the business. What do they like? And it's all us to kind of create whatever our version is of what Faherty is, which is such a gift to have that.
And despite having a more classic aesthetic, you're also an innovator in this space. How do you balance the two of those, and how have you innovated?
Yeah, I mean, I think a lot of it comes down to my brother Mike. He's the chef, he's picking the ingredients, and so he's really done an amazing job of taking all the innovation that's happened into fabric, which is like, with stretch and with comfort, and taking that into kind of our kind of more American heritage aesthetic and kind of merging those two. Because you have activewear on one end and you have sort of fashion on the other, and sort of blending those two worlds when it comes to fabric and comfort and feel, I think has been a big part of our success.
And as we wrap up the holiday season, it is wrapped up, it's January, but what trends did you observe during the last holiday season? I
think people are dressing up more. So I think, we're coming out of a cycle post-COVID of a lot of casual, very casual, everyone wearing lounge and activewear, and I think we're seeing more people dress up. So I think things on our end that are a little bit more wear out than sort of wear at home. We saw a lot of success there. But I think we're getting into like, people are starting to dress up, look cool. Fashion's becoming more, interesting, and there's a lot more newness. There's a lot more silhouettes. So I think it's just fun. It's a really fun time to be in the industry because the customer wants new and wants fun and wants some fashion.
Do you think the trend or the move toward dressing up is kind of a response to being inside a lot during the pandemic, wearing a lot of athleisure? I know people were in the pandemic. Women kind of stopped wearing heels. Do you think people are excited to get dressed up again and go out into the world?
Totally. I mean, people are dressed up to go out in the world. People are just, I think, dressed up to look and feel good. And fashion and clothing is such an expression of someone's, how they're feeling and their personality and their identity. I think people are expressing themselves more and more with that. So, we're 6 years out of the pandemic. I think now it's like, we're starting to see that really, really play out. Are you adjusting your offerings or product line to accommodate that
move?
Yeah, for sure. Like in men's, we're making more blazers because more and more guys are wearing blazers. Like I was here, 3 years ago, and every guy was wearing a quarter zip, like not really blazers. So I think guys are dressing up and going a little bit back to what they were wearing before the pandemic. So you're still seeing a little bit of business casual for sure, but it's becoming a little bit more formal. And so we've got to kind of adjust and evolve and make sure we have that piece of our range accounted for so that we have what our customer wants.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. We've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly, it is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Today is the NYSE debut of the Robinhood Ventures Fund 1. It's a closed-end fund that gives investors exposure to private companies, aligning with Robinhood's mission to democratize finance. And joining me now is Shiv Verma. He's the CFO of Robinhood. Shiv, welcome to the New York Stock Exchange.
Thank you. So excited to be here.
So can you break down this fund for us?
Yeah, the big picture is retail did not have access to private companies. These are staying private for longer, and we wanted them to have access. So we are doing a closed-end fund and giving retail customers the ability to own some of the best private companies in the world.
So what is the difference between a closed-end fund and an ETF?
Yeah, amazing question. So on an ETF, money can come in and out on any given day. On a closed-end fund, you raise a pool of capital, and the money can't leave. And this is great for private assets because you don't have to worry about redemptions, all the capital is there, but it's still exchange traded. And so the best thing is for customers, you can buy and sell it any day, you don't need to be accredited, and it acts very similar to what customers know like an ETF.
And what are the companies that investors will have exposure to if they invest in this?
Yeah, so on day one, we contributed 8 amazing companies of over $350 million to the portfolio, large companies such as Databricks, Stripe, Mercor, Ramp, Airwallex, Revolut, Aura, the Ring Company. These are all excellent late-stage companies. That's the seed portfolio. We then raise capital on top of that so we can continue to invest in some of the best companies in the world.
And you use the term exposure. You're saying that investors will have exposure to these companies. What is the difference between exposure and an investment?
Yeah, great question. The reason we're saying an investment is we've actually owned the equity of these companies. So every single company that we've done, we went through the front door, we purchased their equity, and it's in the fund. There are other companies that will go and buy derivatives of the actual exposure so they don't own the company. But big picture for our retail customers, they should know that we own the equity, all the companies are on board, and it's a great way to actually be shareholders in these private companies.
And I understand the focus is late stage private companies. Is that strategic?
Yeah, so we always start with the customers. When we talk to our customers, the main thing they wanted to is access to some of these companies. Databricks, for example, $134 billion valuation. Stripe, $150 billion valuation. So these are companies that customers know. We know how to underwrite to them. We think they're good investment. So we started specifically with these late stage growth companies.
What problem are you trying to solve with RVI, that is the ticker symbol?
Yeah, so if you are ultra wealthy or you're an institutional customer, you can access private markets. But traditional retail, the mom and pop, didn't have access. So that's what we're trying to solve. There are 4 pain points that customers had. They wanted daily liquidity, so they can trade it any day. They didn't want to be accredited. So 85 to 90% of Americans are not accredited, so now you can buy this fund without being accredited. They wanted low and competitive fees, so it's a low 2% management fee, 1% for the first 6 months. And they didn't want to pay what's known as carry. Carry is what venture capitalists charge a portion of the profits to the customers. We don't have that. And so those are the main problems we were trying to solve: access and making sure that customers can purchase in a fund that solved all of their needs.
And how does this align with Robinhood's broader mission of democratizing finance, making it accessible to all?
Yeah, so we started in the public markets. We want to do it for the public markets to the private markets, exact same thing. So if you think back 10 years ago, before Robinhood started, it was really hard to buy Apple or Tesla or some of the names and companies that you loved. Today, the same problem happens with the private market. So all we're doing is taking that same ethos, what's in our DNA, give people access, and now they can do it with private companies as well.
And can you give us a breakdown of what a closed-end fund is?
Yeah, so a closed-end fund means it's a pool of capital, you raise it on day one, and then the fund itself trades, but no money comes in or out. That's really important when you hold private assets. Some of these are not liquid, and so for the retail customer, we wouldn't have to worry about redemptions or money coming in and out. And so the closed-end fund just means it's closed after today's, we're raising the IPO, but it can still trade. And so if customers think the fund is worth more than the underlying assets, it can trade at a premium. If they think that's worth less, they can trade at a discount. But big picture, they don't have to worry about redemptions. You don't have to worry about money coming in and out. It's a closed-end pool of capital where we own 8 investments today, and now we can continue to make future investments.
And what is your hope for this fund in our last moment together?
Yeah, so if you notice, the name is Robinhood Ventures 1. That's by design. We hope to be back here on the stock exchange floor, hopefully in the not too distant future, with additional funds. We really believe this is a great way for customers to get access to private markets, and this is just the beginning.
All right, Shiv Verma, CFO of Robinhood, thank you so much for joining us at the New York Stock Exchange. Before we go, let's take one last look in the markets. The Dow down almost 2%, the S&P 500 down over 1.5%. That is going to do it for us on NYSE Live. Remember, International Women's Day is on Sunday, and we will be celebrating here at the New York Stock Exchange next week.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?